U.S. President-elect Trump warns to put a 100% tariff on BRICS countries. The U.S. imposes new semiconductor export restrictions on 140 Chinese companies. And Germany to provide 650 million euros in military aid to Ukraine. Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We start off with the U.S. President-elect Donald Trump warning to BRICS member countries, insisting that they commit to not creating a new currency or supporting any currency that could replace the U.S. dollar. He warned that failure to comply would result in a 100% tariff, adding that these nations would be shut out from access to the U.S. economy. Trump made the statement on his social media platform Truth Social. He said he wants the bloc to promise it won't create a new currency or otherwise try to undercut the U.S. dollar.
The massive invasion of criminals into our country, and I will bring back the American dream.
In response to Trump's warning, Kremlin spokesman Dmitry Peskov stated that any U.S. attempt to compel countries to use the dollar would backfire. Peskov said the dollar was losing its appeal as a reserve currency for many countries and that the trend was gathering pace. He emphasized that any attempt by the United States to enforce mandatory use of the dollar might ultimately prove counterproductive. Moreover, the South African government has stated that there are no plans to create a new BRICS currency following a warning from U.S. President-elect Donald Trump. Trump has said he would impose 100% tariffs on members of the bloc that support an alternative to the U.S. dollar. The country's Department of International Relations and Cooperation clarified that recent reports suggesting that BRICS aims to establish a new currency are incorrect. The discussions within the bloc, it explained, are focused on encouraging trade between member countries using their respective national currencies.
U.S. President-elect Donald Trump has warned BRICS nations to halt plans for developing a new currency that could challenge the U.S. dollar's dominance. In a statement posted on his Truth Social platform, Trump called on Brazil, Russia, India, China, and South Africa to refrain from pursuing or supporting any alternative to the dollar. He stated that failure to comply could result in 100% tariffs on BRICS goods and restricted access to the U.S. market. Trump's remarks align with his America First policy, which prioritizes the protection of the U.S. dollar in global trade. The warning comes amid increasing discussions within BRICS about alternatives to the dollar, including the use of the Chinese yuan and blockchain-based stablecoins for international transactions. BRICS has been exploring de-dollarization efforts since 2023, and the bloc's recent expansion with new members like Egypt, Iran, and the United Arab Emirates has further fueled these ambitions. As the group seeks to reduce its reliance on the dollar, the U.S. position under Trump signals potential tensions in global trade. The outcome of this growing divide remains uncertain as both sides move forward.
Joining us from Amman, Associate Professor in Finance and Risk, Dr. Ahmed Al-Naimi, to discuss latest developments on the BRICS currency and Trump's threats of imposing tariffs. Dr. Ahmed, thank you so much for joining us on the Economic Bulletin. Let me first start by asking you, how do you interpret Trump's recent warning to BRICS nations regarding their plans for a new currency?
I want to take a moment to thank you for meeting me today. I really appreciate the opportunity to discuss the recent threats from Trump regarding to the BRICS nations and the intentions to create a new currency. First of all, I will talking about the Trump warning at the highlight to graphically the situations And he cautions for the BRICS nations. We're talking about BRICS nation before Brazil, Russia, India, and China, and South Africa. And now we already, all of us are knowing about the new country that they need to participate in this community. Also, I will talking about how the Trump warning agent creating their new currency to replace US dollars, and he then threats 100% of the trade for non-dollars trading and faces the stake involved. In the light of this commitment, I will shed the light on the commitment requirement that nowadays he become a crucial about Trump had he made it clear for BRICS countries must comment to launching there's a new currencies. And in the result, they will be pushing to add some traps and potential losses that to access to the U.S. market, which will be jeopardize their economic interests.
Now, regarding Trump's threat to impose 100% tariffs, what are the economic and geopolitical implications of this?
Okay, we're talking about the challenging and political economics landscape. They will be putting some stress about the general international economics, and they will be put more impact on the U.S. Dollar dominance. Cannot be understand nowadays, but we think the introduction of the BRICS currency have a significant challenging to the U.S. Dollar's dominance in the global market, affecting the international trading and currency reserve and the international regulation also.
Mm-hmm. Now, sir, I would like to shed light on the timeline. How realistic is the timeline for creating such a currency, given the challenges of unifying diverse economies?
Okay, despite about the timing for this one, all of us hearing about the summit that was held in Kazan, Russia last October. The nation will have a working activity, working together to establish a new reserve currency and potential backed by their currencies or the gold-backed unit. There was significant topics that were discussed in the last summit in Kazan, Russia, and I think they are working hard regarding to these issues to trying to submit a new currencies or to establish a new currencies initiative currencies. So I think nowadays in short time they will be working in this stage.
Mm-hmm. And what benefits could a BRICS currency or financial platform offer to member countries?
So we're talking about the potential benefit for this country. Such currency, it's not worthy. It can be improved efficiency in the cross-border transaction, and also it will be enhanced the financial inclusion also. And they thinking they will be leverage cutting edge technology like we can using about blockchain technologies, smart contract technology. All of us it will be worthy, which is a vital today, a digital economy.
On the other hand, could you tell us the challenges that BRICS nations face in creating a shared currency or financial system?
Yes, we all of us knowing about the challenging that ahead about to implementation a currency. It will be required extensive planning and a coordination between these parties and the establish of central banks to manage financial policies also among member states. And these linguistic hurdles cannot be overlooked, to be honest.
Now, integrating Russia into our conversation, how significant is Putin's proposal to create a financial platform within the BRICS?
So, in response on this challenging Putin financial platform proposal, he aims to tackle inflation and support BRICS economies and faces the group goal of reducing dependency on the dollar. So, the reflection of prospective approach to economic resilience, I think it will be worthy to mitigation the dependency on the dollar or the dominance of the dollars. Yes.
Yeah, speaking of the dollars, how has the global de-dollarization trend gained momentum in recent years, and what role has BRICS played in this?
So, if they successful, the BRICS initiative could be lead to dollarization trends and the decreasing demand on the US dollars also. And I think they will be reshape the future of international finance also and the shifting for global economic dynamics.
Thank you so much, Dr. Ahmed El Naimi, for your insights and for all the information you provided us with. And now we move to the latest news from around the world. U.S. manufacturing activity improved in November, with orders growing for the first time in 8 months and factories facing significantly lower prices for inputs. The Institute for Supply Management stated its Manufacturing Purchasing Managers Index increased to 48.4 last month from 46.5 in October, which was the lowest level since July 2023. A Purchasing Managers Index reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.3% of the economy. The United States has introduced its latest set of restrictions on transferring semiconductor chips to China, curbing exports to 140 companies in China. These restrictions target both U.S. companies and foreign firms that utilize American technology in their chip-making equipment. Additionally, the U.S. will prohibit the export of advanced high-bandwidth memory, a vital component for AI chips, to China. U.S. Commerce Secretary Gina Raimondo described the new controls as groundbreaking and sweeping, asserting that they represent the most stringent measures ever enacted by the United States to degrade China's capacity to produce cutting-edge chips for military modernization. Malaysia's Deputy Trade Minister Liu Chin-tong has urged Chinese companies not to use Malaysia as a base to rebatch products to evade U.S. tariffs. Liu highlighted the risks amid escalating U.S.-China trade tensions and anticipated export restrictions targeting Chinese semiconductor tool makers. Malaysia, contributing 13% to global semiconductor testing and packaging, is positioned to benefit from Chinese firms diversifying overseas. However, Liu warned that investments aimed at bypassing tariffs could backfire, citing recent U.S. tariffs on solar panel exports from Southeast Asia. A private sector survey released by Caxin showed that China's factory activity surged at its fastest pace in 5 months. The Caxin Manufacturing Purchasing Managers Index for November climbed to 52, up from 50.3 in October, marking the highest reading since July. This figure is above the 50-point threshold, indicating expansion rather than contraction. The growth was driven by a rise in new orders, including those from overseas, which contributed to a solid increase in production. Pakistan's annual consumer inflation slowed to 4.9% in November, lower than the government's forecast of 5.8% to 6.8%. This marks a decrease from 7.2% in October and a significant drop from nearly 40% in May 2023. The Finance Ministry had expected inflation to ease to 5.6% to 6.5% in December. Consumer prices rose 0.5% from October, following a 250 basis point interest rate cut earlier in November to boost the economy. In Europe, Eurozone manufacturing activity dropped significantly last month, with a continued decline in demand likely eliminating any hopes for a quick recovery after the sector showed signs of stabilizing in October. Hamburg Commercial Bank's final Eurozone Manufacturing Purchasing Managers Index, compiled by S&P Global, fell to 45.2 in November, in line with the preliminary estimate and well below the 50 threshold that separate growth from contraction. A new report shows that British manufacturing activity experienced its sharpest decline in 9 months, with both domestic and foreign orders falling and ongoing supply chain disruptions driving up costs. The S&P Global Manufacturing Purchasing Managers Index dropped to 48.0 in November, down from 49.9 in October, falling short of the initial estimate of 48.6 and below the 50 mark, which separates growth from contraction. S&P attributed the downturn to several factors, including a €25 billion increase in employment taxes from the new Labour government's budget on October 30, a 7% hike in the minimum wage, shipping disruptions in the Red Sea, and the potential impact of global good tariffs. German Chancellor Olaf Scholz has confirmed that his country will provide new military aid to Ukraine worth 650 million euros this December. A German Defense Ministry spokesperson clarified that this will be part of a 1.4 billion euros package already announced in October. This came as Scholz visited Kiev for the first time since June 2022.
Das hat große finanzielle Aufwendungen zur Folge.
French Prime Minister Michel Barnier invoked Article 49.3 on Monday to pass a budget bill without a parliamentary vote, citing the need for physical stability. The move, prompted by a divided National Assembly, allows opposition parties to file no-confidence motions, with votes expected this week. The bill addresses France's high debt and deficit challenges while meeting European Union guidelines. If a no-confidence vote succeeds, Barnier's cabinet must resign, though President Macron would appoint a new prime minister. This is the first of 3 physical measures likely to face similar challenges.
Que les Français ne nous pardonneraient pas de préférer les intérêts particuliers à l'avenir de la nation.
According to data from the Australian Bureau of Statistics, Australian retail sales rose 0.6% in October, marking the 3rd consecutive monthly increase driven by tax cuts, boosting wages. Year on year, sales grew 3.4%, reaching $23.9 billion. Retailers reported stronger sales ahead of Black Friday, with increased spending on electronics, particularly TVs and audiovisual equipment, and online discounts. While inventory data showed a slight drag on the economy in Q3, net exports indicated continued growth.
Markets are now pricing in a 60% chance of another hike in July.
In the MENA region, Egypt has signed an agreement to enhance liquefied natural gas supplies to Jordan through the existing pipeline network, enabling Jordan to access floating storage and regasification units in Egypt for the next 2 years. This deal aims to address Jordan's gas supply needs, support its LNG infrastructure development, and reduce costs for both nations. Under the deal, Egypt will supply up to 350 million cubic feet of gas daily to Jordan, with LNG deliveries handled by floating storage. Regasification units in Egypt until 2026, when a new onshore regasification unit in Aqaba will take over. The deal offers Jordan cost efficiency as it only pays for gas actually used. The World Bank expects economic growth in the Gulf Cooperation Council region to accelerate to 4.2% in 2025 to 2026, but remain subdued at 1.6% in 2024. The bank clarified that the region's growth is being driven by the non-oil sector, which is showing strong growth of 3.7% due to ongoing diversification efforts and regional reforms. It added that inflation has remained low and stable at 2.1%, supported by subsidies, fuel price caps, and currency pegs. However, inflationary pressures in the housing sector are still present in some countries. The 16th Conference of the Parties to the UN Convention to Combat Desertification has kicked off in the Saudi capital of Riyadh. The conference runs from December 2nd to 13th and aims to address the pressing issue of land degradation and drought. COP16 seeks to mobilize international cooperation and strengthen commitments to sustainable and management practices and boost drought resilience.
Excellencies, distinguished delegates,
Morocco's Federation of National Wheat Traders and Russia's Union of Grain Exporters have signed a deal to boost Russian grain exports to Morocco. The agreement aims to diversify suppliers and enhance strategic stockpiles of key staples. The agreement, signed during a visit by 37 Russian wheat traders to Morocco, reflects deepening trade ties between the two nations. This partnership comes as Morocco seeks to bolster food security and mitigate risks from global supply chain disruptions. In the tech world, the U.S. Energy Department plans to loan up to $7.54 billion to Stellantis and Samsung as the 1 for 2 electric vehicle battery plants in Kokomo, Indiana. The loan includes $6.85 billion in principal and $688 million in interest. The plants, set to open in 2025 and 2027, will produce enough batteries for 670,000 vehicles annually. This funding is part of the Energy Department's push to support the EV sector following recent loans to Rivian and General Motors. Stellantis also plans a gigafactory in Canada. The yuan fell to a 4-month low on Monday as tariff threats and mixed purchasing managers' index data raised concerns that China's economy might need additional policy support. The onshore yuan dropped to a low of 7.2675 per dollar, its weakest since July 24, despite a private manufacturing survey on Monday showing that China's factory activity expanded at the fastest pace in 5 months in November. Global stocks had a mixed performance as monthly surveys showed improving conditions for manufacturing. In the United States, early trading, the S&P 500 rose 0.1%, the Dow Jones Industrial Average was down 0.4%, and the Nasdaq Composite was 0.8% higher. In Europe, Germany's DAX was little changed, the CAC 40 in Paris sank 0.8%, and Britain's FTSE 100 edged 0.1% lower. In Asian trading, Hong Kong's Hang Seng gained 0.7%, the Shanghai Composite Index jumped 1.1%, the Nikkei 225 Index advanced 0.8%, and the Kospi slipped less than 0.1%. That's all for now. Here's a roundup of today's key headlines. U.S. President-elect Trump warns to put a 100% tariff on BRICS countries. U.S. imposes new semiconductor export restrictions on 140 Chinese companies. And Germany to provide 650 million euros in military aid to Ukraine. That's all for today's Economic Bulletin on Q News. Stay connected for more news and updates, and thank you so much for watching.